Thank you for joining today of the Penalty Abatement Basics and Techniques course. Just a little quick bit about me. I've been doing this more than 25 years at this point, and I get to share with you some of the knowledge I've gained over the years, so you're certainly welcome to read this if you like. I am an enrolled agent. I get to teach and speak quite often, and I'm really thrilled that you decided to go ahead and choose this as the course that you would like to sit in with. So today what we're going to be covering is, this is all a overview course, a basics course, so we're going to be touching high level on things to do with penalties. We're going to go through a quick overview to discuss how penalties are calculated. We're going to be going through the Internal Revenue Manual Part 20, which deals just in penalties and interest. Give you an introduction on what the RCA is, so at the end of this you should know what those abbreviations mean. And then we'll talk about remedies, such as the First Time Abatement Program and reasonable cause considerations. So we're going to go ahead and dive right into this. So a quick overview of penalties. First, if we look back and say, what's the whole purpose of this? Why do we have all these penalties to begin with? The reason is it's designed to encourage compliance from taxpayers. We have a voluntary tax system, but the bottom line is, unfortunately, it causes liability to increase at substantial rates. If we go back in time and look back in history, we had very few penalties that existed, 14. But now with every new bill and every new tax law that comes out, we have hundreds of new provisions. So even though the intent is great, the bottom line is it really increases the liability at a very substantial rate. So if we look at all the different types of penalties that can exist, in practice we may see commonly estimated tax penalties, which we'll talk about in a moment how they behave a little differently. We have collection-related penalties and accuracy-related penalties. We may have other types of ones that hopefully you don't ever encounter, a preparer penalty. And there's also civil penalties, which an example of that might be a failure to file an information return, like a 1099 or W-2. So there are lots of different types of penalties as well. If we look at an estimated tax penalty, I told you they are a little bit different in how they behave, and that's because they resemble and they behave a lot more like interest. In fact, the rate of estimated tax penalty is the same rate as the current going interest rate. So right now, we're looking at about a 4% rate. Now, they don't deal in cents or percentages or fractions of it. It's just a plain old 4% rate. So as an example, back in 2017, our short-term federal rate was 1.04%, and then they add 3% to whatever the federal rate is. So the whole year 2017 was trucking along at 4%. Now in 2018, 4%. We don't see that changing much over the recent few years. But if the short-term federal rate substantially goes up, just be aware of that and know that your estimated tax penalty rate will change accordingly. As the next thing we talk about, a penalty that behaves a lot more like a penalty, is the failure to file penalty. So the failure to file penalty is just kind of like it sounds. Somebody did not file a return by the required due date, including an extension. So our individuals that are supposed to file by April 15th, if they do an extension and they get it in by October, they're still on time. They don't get this failure to file penalty. If they fail to do an extension and they file by October, then they do get a failure to file penalty. It's calculated at 5% of the unpaid tax for each month or partial month. So that continues along up to 5 months and they reach the maximum. So they can max that penalty out in just 5 months' time at 25% penalty. Now you may say, well, but they don't really owe all that much. They, owe just a couple $100. Well, there is still a minimum penalty of $205. So if they owe up to $205, the penalty equals the tax. Well, that sounds unfortunate because that sounds like a 100% penalty to me, but they are subject to an inflation adjustment. So what that means is every single year that little $205 minimum penalty is going to keep changing year by year. So there is a minimum penalty of $205 or whatever the tax is owing. So if they owe $100, their penalty is $100. So that we may have that if they don't file on time. In addition to that, there could be one for companies. Companies have a little different type of a failure to file penalty. So they don't file their corporation form, their partnership form, any of these forms by the due date or complete information. So let's say they file a return but they're missing information, it'll be considered to be not filed on time, unfortunately. That one is based on a rate per month. That's $195 per month per number of partners. So let's say you have a partnership with 3 partners, $195 a month times the 3 partners times the whole year that they're late. It can be charged for up to 12 months. Now, if you are working with a non-filer or severely late returns, those amounts are a little bit different for prior to 2010, but right now you can kind of just say, oh yeah, I know it's $195 penalty per month per owner, partner, shareholder, etc. We also have a failure to pay penalty that exists. So what that is if they don't pay the full amount by the original due date. So again, using our individual income tax filers as an example, they're supposed to be having a due date of April 15th. Even if they do an extension so they can file the return later, their money is still due by April 15th. And if they don't pay it by that due date, it's not as harsh as not filing, but it's still 0.5% of the amount owing for each month. And then that can truck along until it reaches 25% maximum, but it takes 50 months to reach that maximum. And then the little reminder that I always have to tell my clients is just because they extend the time to file the return doesn't mean they get an extension of time to pay. So we'll have clients that think they're doing everything on time and doing everything right, but they still get hit with this failure to pay penalty. So it's helpful to at least know how these are calculated, because our first line of defense is it right? That's the first question I always ask. Is it right or is it wrong? If the penalty is calculated correctly, then we work on what do we do to remedy it. So what about if a failure to file and a failure to pay both apply? Well, there's a little bit of a rule that says, okay, well, we will know one is 25% maximum, the other is 25% maximum, but we'll give you a little bit of a break. They can't ever exceed 47.5% for both combined. But really, for all intents and purposes, that's pretty much 50% of their unpaid tax that gets assessed in penalties. If they're not in compliance, they don't file and pay on time, then it can end up being substantial, because the other thing that happens is interest. Interest gets added to the base tax. Interest gets added onto the penalty. So it's, for all argument's sake, you can say 50% that they could be potentially adding on if they do both of those. There's also for employers, we have something called a failure to deposit. So if they aren't paying the payroll taxes and depositing it on time. So if they aren't doing it on time, they do a wrong amount, they do it in the wrong manner. And that would be they were supposed to pay it electronically and they don't, then they can get assessed a failure to deposit penalty. So the failure to deposit penalty is more of a graduated penalty. That one's based on how many days past the deadline before it comes in. So if it is just 1 to 5 days late, it's a 2% penalty. If it's between 6 and 15 days late, we're looking at a 5% penalty. So this is just a couple weeks' time when you think about it. If it's more than 15 days late, 10% penalty. So it does not take hardly any time for it to rack up very quickly. So let's say that they fail to make the payment and the IRS gives them a notice. It says, hey, you forgot to make this payment. And they go ahead and pay within just a very quick time frame. They get the notice, pay it in 10 days. Well, then they'll get just a 10% penalty. But if they don't do it within that 10 days, it rises to 15% instead. So this is all very time sensitive. They want to really be very strict with employers. They're going to really have substantial penalties in comparison to the other ones we just talked about. If they're required to pay it by electronic funds transfer and they fail to, then they get a whole additional 10% because they aren't doing it in the electronic means that they're supposed to pay it. So if we look at all the potential things that can happen to that employer, that let's just say they did the worst of everything. They failed to deposit correctly, they failed to file, they failed to pay, all these different ones layer in to where it can end up being quite substantial for that employer. As we look at, okay, how do we go about fixing this? What do we do to help somebody? We have a little bit of a baseline that we've just laid down to say, this is exactly how we go about calculating the penalties. And that's important because, again, the first line of defense is say, is it right or is it wrong? We got to know that the penalties are calculated correctly. But then we say, really, what do we do about it? We have to go through, and this is one area where we're kind of like begging for forgiveness. We know that this client filed wrong, didn't file on time, they didn't pay on time, etc. Whatever it is that caused the penalty, we're going to go to the IRS and say, would you please forgive us? Would you consider maybe giving up this penalty? It's called a penalty abatement request. How do those work? We actually go through a little bit of software called the Reasonable Cause Assistant. So we're going to go ahead and talk about that here real quick. The reasonable cause assistant, what it is artificial intelligence. It is software. And just to take a real quick step back too, is we're playing within this arena that I have a lot of references in here called the IRM. We're in section 20 of that. Well, what that IRM is the Internal Revenue Manual. This is like having the other team's playbook when you're on a sports team. I mean, imagine that. We could have access to the other team's playbook. It is really that you need to know where these are found. So you can go to the irs.gov site and just search Internal Revenue Manual, and it brings up the whole thing beautiful right there on the screen. You can see it right within Canopy software. They have links to the IRM as well, but just know this is where you find it. So as an example of this, I'm referencing where it's talking about what the RCA is right within this IRM section. So section 20, that's all penalty and interest. They actually call it the Penalty and Interest Handbook for agents. And then these little sections like section 1, subsection 1, 3, 6, etc. They name it Decision Support Interactive Software Program, which sounds funny. It's just basically an artificial intelligence program. But it is this RCA, this Reasonable Cause Assistant program, that actually determines whether or not they're going to give us penalty relief. So we have to at least know it exists and know we do get the question sometimes, well, can I access it? How do I get into that? Unfortunately, it's nothing that we can access. This is only an agent that can access it. But it is like a little rabbit trail. And the way I describe that, I actually just had a call recently that I called the IRS and said, here's what I'm trying to do. So every question that comes up on that RCA, depending how you answer, it leads you to a different question. And that one leads you to a different question. So it feels like you're just running through this little rabbit hole into a maze of different directions. But that's what the RCA is. They can override it if necessary. They may not know about that sometimes. It depends on the skill level of the agent you're working with. But the idea of the software is they thought that they were being too subjective in the past and giving relief where they shouldn't have and not giving relief in other cases. So they came up with software. What the software will do is instruct the agent to perform other case research first, like is there any obvious deposits or payments that need to be applied? Maybe research if there's a missing extension, do some things to try to take care of it before running through the software. But if it's 3 particular kinds of penalties, and we'll talk about that next, why these matter. If it's that failure to file or failure to pay or failure to deposit, the RCA is going to go and look for something special first. It's going to see if they're maybe eligible for a first-time abatement. But it's going to look at reasonable cause, all these things that we're going to talk about some strategy in a moment, but they have to run it through the software. And you'll find that when you see these little abbreviations, one of the reasons I teach on the abbreviations, you want to speak the same language as those that you're working with. But the RCA, you're going to see lots of references within the Internal Revenue Manual to the RCA. But bottom line, success sometimes just is persistence. This call that I recently did, I knew that it was taking me down the wrong rabbit hole. So I told the agent, this moment, can you I asked her not to log it, and so she didn't log it. And I called back again, I think maybe 10 minutes later, and we went down a different rabbit hole and it worked. So it just, sometimes that's what it takes. And being persistent is where you can produce those results.